So many investors make the mistake of thinking they're going to be a hero and buy Bitcoin at the dead bottom, and it never works. Price just continues to move lower and lower and lower from your initial entry price, and you're at a loss, you get frustrated, and generally, you're going to give up. But there is a simple strategy that you can employ to bring your average down, get an overall great entry so that you're buying next to the bottom on any asset, whether it be Bitcoin, Ethereum, or XRP. And I'm going to show you exactly how to do it. Hey team, my name is Matthew Breenan, co-founder and partner at CryptoCharge.com. A few reminders before we get started here. Over at CryptoCharge.com, we do so many great things to help make your investing so easy. We give you guys 5 live shows every single week, Monday through Friday. We give you guys the top news that we're looking at. We give you guys our weekly plays showing you what we're looking at long or short, as well as a full educational library to get you started and involved in the crypto ecosystem. You guys can get started with TA Academy for 40% off. That's TA Academy for 40% off. But let's get into today's episode. I want to talk to you guys a little bit about something called DCA, or dollar cost averaging. So like I said, a lot of people try to buy the dead bottom or try to do lump sum investing, and it generally does not work out in the long term, or you're leaving a lot of money on the table by not averaging out. And essentially what you do is you select a certain amount of money, whether it's a monthly contribution or you have a set amount of money that you want to distribute over a certain amount of time, and you decide maybe 6 months, 12 months, 18 months, whatever that time horizon looks like for you, and you want to invest evenly over a set period of time. And what happens is you get a clean average somewhat near the bottom once you start to see those signs coming in, right? And we're gonna go over some examples of what that looks like. But before we get into that, let's do a little bit of analysis on the markets, take a look at a few charts here, and then we'll go over those examples. So the first thing that we always need to do when we're looking at the crypto markets is look at Bitcoin. And whether you're gonna get invested in Bitcoin or not, you always need to take a look at it because it is the first mover advantage. Most cryptocurrencies follow Bitcoin, even if we see altcoins behaving in an altcoin season where they outperform Bitcoin, you'll still see generally Bitcoin kind of leading the charge, giving us some indicators of what might happen in the market next. So that's why we start with Bitcoin. So looking here at this chart, we're here on a daily chart. And if you've been tracking Bitcoin for any period of time, you can see that we've really, been in quite a bit of a decline since we topped out here back in November of 2021, up at near $69,000. We're currently trading around $19,350 today. And of course, downtrends do not happen in a straight line, just like uptrends do not happen in a straight line. They continue to make higher highs and higher lows in an uptrend, and they make lower lows and lower highs in a downtrend. And that's what we have right now. Every time we see a rally or a move to the upside, it gets sold, and we see a bigger move to the downside than we saw to the upside. So what we're seeing right now, this particular structure is called a bear flag. And it's a bear flag because this consolidation structure that looks like this little triangle pattern came out of a downtrend. It didn't start from an uptrend, it came from a downtrend. So the next anticipated move from this structure should be more bearishness. And we have a little bear here, and I'm going to show you guys exactly where he's going to sit as far as our target. So I wrote down here mega value zone between $11,000 and $14,000. We may or may not get down to $11,000, but I do have some strong confidence and conviction that we will at least test $14,000 before we get some sort of retracement or move higher. You can see historically back here in 2019, this was a big area of interest. And over here, that there was a lot of consolidation and contention over here in 2017 before we ended up heading into that capitulation structure. So definitely a value buy zone for me. So when I look at the structure here, I think that the target of $14,000 is the most ideal place where Bitcoin is going to head to. Now, there's no guarantee that Bitcoin will stop exactly at 14,000, right? It's not necessarily going to get a breakdown. We stop at 14K flat and then we just head into a straight bull run, right? Because we still have this economic backdrop with the Federal Reserve right now, where they're doing quantitative tightening. They're being less accommodative to the markets. They are hiking rates, making credit more expensive for consumers. So people are buying less things like, cars, homes. They're putting less money on their credit cards because credit is more expensive right now. Add that with the fact that they're not buying mortgage-backed securities, meaning basically they're not propping up the housing market right now. That's going to send risk on assets like Bitcoin, stocks, and other risk on assets significantly lower. So I do think that this continues in a downtrend until that economic picture changes and we start to see cutting of rates, essentially making credit cheaper for consumers and also being accommodative to the markets by buying mortgage-backed securities and putting those on their balance sheet sheet, and risk on assets do like that, right? So if we see a combination of some technical levels, $11,000 to $13,000 Bitcoin, in conjunction with the narrative switching, that is a good sign that the bottom may be in, right? There's never a single sign or metric that says the bottom's in, but that's one of those big factors that we're going to look at that will play a role in when that bottom comes in, okay? So that's where I'm going to be looking on Bitcoin in order to, really capitalize on that. If you guys want to see how we're navigating the short play, you guys can head to the weekly play section at cryptocharge.com. We give you guys all the metrics, stop loss, take profit, entry, and all the updates there. Moving on down to Ethereum, you can see that we're in a similar structure, not exactly the same, but the downtrend has been intact for quite some time, specifically the top of this structure since April of 2022. We can see multiple examples of the top of the structure coming in. We're seeing some underside support here, but again, this does come from a downtrend, so we are expecting more bearishness as a result. And I'm looking to maybe $700 as that first target on Ethereum. And again, we could see that bear market stop as low as $370 or $400 on Ethereum. Now, I know it doesn't seem very realistic right now, but we look back in 2018, we saw a lot of consolidation. We saw, for example, on Bitcoin holding in those high 5,000s, and then we got that final down move, that capitulative move towards roughly $3,000. Now, it was a short-lived move down, but it doesn't mean that there wasn't opportunity there to pick up extra coins and lower your average, right? So still looking for some bigger value buys on Ethereum. And then my personal favorite, my biggest bag, XRP. Looking at this more macro range, this range was produced from a Fibonacci range all the way back here in 2014, 2015. You can see that we selected the swing high over here at 6 cents to the swing low at sub 1 penny, and it's produced a super accurate range. And currently, we're stuck trading just below the 8 Fibonacci, and Fibonacci sequences can go forever, but these are some of the numbers that we see respected in charts all the time. So I do think, looking at this chart here, that first of all, at the minimum, we're going to move towards 37 just to backtest this. But if we're going to see Bitcoin move down towards 11 to 14,000, we're going to see Ethereum move down towards $400 to $700. We should expect a proportional move from XRP, which means fresh lows being set, taking out all of these June lows. So the first areas of interest would be between 21 cents and 25 cents. But I do think that there is a possibility we get down towards maybe 17 cents before reverting higher. But again, there's no way to pick this exact bottom. Imagine waiting and not buying anything until 17 cents hits and you see it come and smack 21 cents, and then it just goes on this huge, enormous bull run, and you didn't scoop up any XRP. You'd be pissed, right? Especially if you look at some of the targets that we have, which we'll get into in a minute here. So I want to show you guys why dollar cost averaging is powerful and how some of that might look for you. So the first thing you need to decide, if you're not going to do a monthly investment, you need to plan out your investing. You need to be tactical and you need to be thoughtful with it, right? A lot of people jump in because they see Doge coins firing off, or your friend told you about this asset that's done 500%, so there's still time to get in and they'll do another 500%, right? And those generally don't work out very well. Rushed investing doesn't work. So when you have a plan for yourself and you're thinking a little bit about how much I want to invest, over what period do I want to invest this, and how many assets do I really want to invest in, right? Because there's 20,000 plus cryptocurrency projects and counting right now out there, and you can invest in all of them. And a lot of them will go to zero. There's a lot of altcoins that will not do well at all. Just because there's a good, looking website and, there's a lot of Twitter hype does not mean that a project will go all the way, right? So you need to be very picky. I say that you should have maybe 6 to 10 core assets. You can have micro holdings outside of that, but your focus, especially as a newer investor, should be 6 to 10 assets and hyper focus on those. So just for the example's sake here, let's say for our total investment, we want to invest $10,000, right? And out of that, we'd like to invest upfront 10% of it. So obviously $1,000. Now, if I had 10 assets, that would be $100 per asset upfront, just so I not establish those initial positions. You don't have to do an initial investment. You can just start with your DCA right away. But a lot of folks like to do an initial just so they feel like they have skin in the game, and then they start their dollar cost averaging. The DCA window is the next most important thing to select. So based on what I'm seeing out there right now, there's a lot of different metrics. We look at on-chain metrics. We look at a variety of other things. Generally, the bottoming process for cryptos is generally, at this point where we are, is somewhere between 5 and 10 months. So we're anywhere from a fifth of the way through to a tenth of the way through. So I would say anywhere from 8 to 12 months is a really safe place to put your DCA window. So let's say we want to do it over the next 8 months. We'd like to distribute out of the remaining $10,000. We want to distribute that, right? So let's go ahead and say out of this, we
only want to have 6 assets, right? Because we just want to really concentrate our money as much as possible. So in this calculator, I can see that I want to invest a total of $1,000. I want to DCA $9,000 over this 8-month period. So that tells me every single month collectively, I want to dollar cost average $1,125. And because I selected 6 assets, $187.50 per asset. Now let's say I want to focus on less assets, or I want to focus on 3. You can see that I'm able to put a lot more money towards each asset, $375 per month. So, but let's just say in this example, I want to do 6 assets. So here's where it gets a little interesting, right? Because nobody can predict what your exact dollar cost averaging price is going to be. If we expect prices to come down towards maybe 20 cents, that could be really advantageous, right? But maybe they hover a little bit closer towards the 30 or 40 cent range. So you can toy around with the simulator just to kind of see what that might look like. But let's say in this example that I think that the average DCA price I'm going to have is roughly 40 cents. So I can see here that my total invested in this project, because I'm going to do this over 8 months, is $1,500. I should accumulate roughly at 40 cent average 3,750 XRP. And you can see down here with these targets that at an $8 target, I'd make roughly $30,000 for a 2,000% ROI. At target 2, at $13, I'd make roughly $48,000 for a 3,200% return. And target 3 at $21, I make roughly $78,000 from just an initial $1,500 total investment for almost a 5,200% reward, right? Now, let's say that my average isn't as good as 40 cents. Let's say I started a little later, I'm catching this video later on, and my average is 55 cents, right? Well, look at that. I'm still going to make great money, but the longer that you wait to start your DCA, the lower chance you have of catching any of those lower prices, and you're going to get more of your DCA at the top, right? Let's say that prices spend more time down there at the lows, and we have something closer to a 30 cent average, right? Let's put 0.3 here. You can see that now my $21 target is a 6-figure reward. My target 2 is $65,000, and my target 1 is $40,000. Now, this isn't to say that prices get there all at once or that any of these targets are guaranteed, and certainly not financial advice. But if you take this strategy and you plan it out and you look at all of your assets, pick your assets. We've got a lot to pick from over at cryptocharge.com. We've got a whole coin library with our recommended coins and ROIs, and we do all of this heavy lifting for you. But sitting there and making a plan for yourself is going to, first of all, take the guesswork out of it, take the anxiety out of it, and it's going to make you more profitable over the long run. I hope this was helpful for you guys. Catch you guys at the next Technical Analysis Academy.